PayPal just reported their Q1 earnings result. I think it's the first time they actually do this before the market opens. We did a live stream, we've talked about all of that, but since none of you really want to watch an hour-long live stream or more, I'll put it in a small video. At the time of making this video, the stock is up 2.45%, but in my opinion, looking at the stock price doesn't really tell you much. SoFi, for example, yesterday, I think it was a pretty good quarter. Conservative guidance, as always, stock get punished. If you only look at the stock price, you don't really understand, you don't really know that the business is actually doing quite well. When you see things going up and to the right, it's usually a positive thing. Now, with regards to PayPal, of course, expectations were quite low, valuation quite low as well, growth-wise, okay, not the highest growth out there, but in my opinion, they're doing all the right things. This earnings call was actually a pretty good one. I wrote down some couple of notes which we're going to cover in this video. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. We have plenty of earnings report to go over in the coming days and weeks, so make sure you're subscribed. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get a top 10 best stocks to buy now, or go to food.com/couchinvestor. Thank you very much. So I'll start off with a Q1 snapshot. So TPV was up 14% year over year. They beat TPV estimates by 2.8%. Revenue was up 9% to $7.69 billion. They beat revenue estimates by 2.4%. Transaction margin dollar came in at $3.46 billion. That's up 4% year over year. Non-GAAP operating income $1.39 billion. Non-GAAP operating margin 18.2%. Non-GAAP EPS $1.08. They beat GAAP EPS by 5 cents. Now, if you're going to compare non-GAAP, it's going to be quite tricky because now it does include stock-based compensation. Then looking at transaction margin in detail here, I'm fully focused right now on showing you here transaction margin dollar, which have improved year over year, up 4% year over year. Transaction margin dollars are going to be positive for the full year. I think that's a big plus for long-term investors. This is what you want to see. There's going to be some ups and downs, but overall for the full year, they expect it to be positive. As for transaction margin, it has come down quarter over quarter. Last quarter, we got a surprise of it being up quarter over quarter. Now it's down yet again, and it's also down year over year by 213 basis points. But overall, it's all about the direction we're going here. And with regards to transaction margin, we're going into the right direction. With regards to total take rate, that has come down yet again. They say here take rate will come down this year, but not as much as last year. They say that transaction take rate, which is down 5 basis points, driven by lower gains in FX hedges and fees and branded checkout, volume and merchants mix shift. Then with regards to account and activity metrics, active accounts actually increased quarter over quarter from 426 to 427 million, but it's still down 1% year over year. Again, the story here is about focus on quality and not on quantity. Why is that? Because one, if you look at number of payment transactions, that's up 11% year over year. Transactions per active account is up 13% year over year. Plus we got a new metric, or at least a new-ish metric, monthly active account, that was up 2% year over year. I wrote here, more product innovation, more adoption will lead to more checkouts, which means more revenue for PayPal and for the merchants. Then with regards to free cash flow for the quarter was $1.8 billion, which includes a $0.1 billion net negative timing impact between the originating European buy now, pay later receivables as held for sale and the subsequent sale of those receivables. Free cash flow grew 76% year over year. Adjusted free cash flow increased 86% year over year, and they repurchased $1.5 billion of stock in that quarter. Again, they expect at least $5 billion in buybacks this year. Then as for guidance, they raised annual GAAP EPS by 5 cents. Q2 guidance, non-GAAP EPS, low double-digit growth, revenue growth of approximately 6.5% on spot and 7% on an FX neutral basis. Remember, last quarter guidance was also weakish and they beat it quite comfortably. Let's see if they can do the same for Q2. For fiscal year 2024, non-GAAP EPS mid to high single-digit growth, free cash flow of approximately $5 billion, and share repurchases, like I said, of at least $5 billion. Then some notes that I took from the earnings call. I did not go over the transcript. I did not have time right now. So if there are some small mistakes, do correct them in the comments, or I'll do that myself once I go over the transcript later today. So one, with regards to Fastlane, they saw an 80% conversion with returning guests with a focus group. They are going to aggressively price that to drive more adoption. Also, they told us that 40% of unknown users opt into Fastlane for payments on guest checkout. Again, this is all about driving adoption. This is about reducing the friction to actually spend your money to check out. This is something that PayPal has not been working on for a long time. Now they are really focused on that. Innovation-wise, all the new products is not really baked into guidance. With regards to Venmo, I was very shocked by hearing this, and Alex Chriss was not happy at all. He says here that $18 billion each month flows into Venmo, but 80% of it leaves within 10 days. And Alex Chriss responded with this, and I quote, "This is unacceptable." They told us there's 7% of SMB volume in PPCP. Again, horrible name. They are focused on serving to win the small business market. They are going to switch now to a pay for performance culture. In my opinion, this should be in politics as well, but okay. And then with regards to the Zoom investments, big competitor to Wise, they said that this product was dying because they did not invest in it at all. And so now they're investing in it. They want it to grow. They're seeing some growth, and there's going to be some positive impacts if you choose to use their stablecoin. Why is that? Well, if you use the stablecoin, fees are getting reduced quite significantly, sometimes completely disappear. So overall, pretty good call, pretty good earnings report, lots of information that was given that was actually useful. Plus there was some excitement from Alex Chriss, so I guess he learned his lesson there, but overall pretty good. On Thursday, Roy Crossroads is going to come on the channel. We're going to talk about that a little bit more. Right now, it is a red day overall for the market, so the stock being up close to 3% on these results, I think it's still a win, but you shouldn't really be happy with just, oh, it's up 3%. No, you should be happy because the business is actually doing now much better. And if they can continue like that, I'm pretty certain that the business is worth way more than what it is today. I have no intentions on selling my shares in PayPal. I know some people are talking about fintech weakness. I know on Wednesday, Jerome Powell will talk, so he will have a positive or negative effect on the stock market. But overall, you're investing in businesses. You're not investing in macro. Yes, sometimes macro can have a negative effect on the business you invest in the short term. Strong businesses with good executing management will be able to navigate those muddy waters. So, I mean, we've seen that with SoFi as well, right? SoFi has been hit, the core business has been hit since 2019, and yet you see it going up and on the right, profitable right now and improving. So, yeah, that's about it for me. Very happy with the way PayPal is executing right now. There's still some long way ahead. They are still trying to grow in a sustainable way. So give them time. But right now, I think this was a quarter where they can put a line in the sand and say, look, this is what we already have achieved. Still a long way to go, but these are the results, the early results right now. In my opinion, it's only going to get better from here. Of course, I can be completely delusional, but in my opinion, I have put my money where my mouth is. So there is that. Of course, do share your thoughts down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.